Good evening. I'm Rich Stevens, and this is a special edition of The Cold Take. When we report markets data, I've had questions about investing. I'm not a financial advisor, and The Cold Take does not take positions on the stories that we report. But I still wanted to give a little bit of background about what the markets are and how we measure them. The markets we report are indexes. They're like scoreboards. There are many more indexes than the three that we report on, but we chose the Dow Jones Industrial Average, the S&P 500, and the NASDAQ. The Dow Jones is based on 30 companies listed within the S&P 500 and excludes transportation, utilities, and global companies. It's a snapshot of the 30 biggest U.S. companies. The S&P 500 also measures large companies, but a larger selection, so it gives a broader picture. NASDAQ Composite tracks over 3,000 securities. Together, these three indexes can measure the overall stock value in the United States. You can't directly buy shares in the indexes, but you can invest in funds that follow the indexes. For example, most investment companies like Merrill and Schwab will have options from Vanguard, BlackRock, and other companies that offer funds. When you buy shares in a fund like this, you spread your risk across the entire portfolio of individual stocks within the fund. Funds generally focus on something specific, so there are funds that invest only in emerging markets or buy stock in small companies or large companies. When you buy an individual stock like JetBlue or Microsoft, your gain or loss is only based on the performance of that one individual stock. When you buy shares in a fund, your gain or loss is based on the performance of the whole pool of stocks. If you have a 401k or IRA, you can usually choose which funds you are invested in and at which levels. We also include gold in our weekly markets wrap. Commodities like gold and silver have traditionally been used as a hedge against inflation or market drops. For real-time metal prices, you can look at Kitco, that's K-I-T-C-O. Finally, how do we measure markets at the Cold Take? If you follow the market indexes closely, you'll notice that trading occurs even while the U.S. stock exchanges are closed. That means the value of an index can, and does almost every day, open above or below the previous day's close. This can create misleading reporting. For example, if the Dow Jones closes at 45,000 on Tuesday, opens at 44,000 on Wednesday, and then closes at 44,500, most outlets will report that the Dow is 500 points up when it's actually fallen 500 points from the previous close. For that reason, we take a snapshot on Friday night after the stock exchanges close. Knowing that this number will move over the weekend, we just treat the Friday close as our benchmark, and we have a spreadsheet with those numbers going back to August of 2025. We feel like this gives a more realistic picture of what happened this week with fewer peaks and valleys. If we missed something, please let us know in the comments, and don't forget to hit subscribe to be notified of upcoming videos. I'm Rich Stevens, and this has been a special edition of The Cold Take.